back. Stock Rock. Today I'm breaking down an airline stock that is reporting earnings tomorrow morning. Delta Airlines kicks off earnings season with its third quarter results. If you follow airline stocks, you know Delta is the one to watch compared to all the others. But is it finally ready to take off, or is this going to be some turbulence? Let's dive right in. Alright, so we're going to go over the numbers. What's expected for Delta tomorrow? About $16 billion in revenue for quarter three, a solid about 9 to 10% increase year over year, despite the tough industry and the tough macro environment that we're in right now. We're in a very uncertain economy at the moment, and there's a lot of cutting back on spending and people losing their jobs, government shutdown. Some people are starting not to work because of that, so very uncertain times. Earnings per share consensus is coming in at a modest $1.52, a 1.3% growth, fueled by strong demand for premium seats and international travel. That growth puts Delta ahead of many peers in the industry. Let me break down why. Alright, so how does Delta compare to its peers? Here's a quick snapshot of some other major airlines, recent quarter revenue, and EPS. So United Airlines, ticker UAL, posted about 13.2 billion in revenue in quarter 1 2025, with EPS near $9.97. United's revenue growth lags a bit behind Delta due to some operational issues and higher costs. American Airlines earned roughly 12.6 billion in revenue and had EPS around 84 cents. American Airlines revenue was essentially flat year over year, showing more pressure and margin challenges. And now Southwest reported around 6 billion in revenue quarterly, with EPS at 64 cents. As a smaller domestic focused airline, its growth is a lot slower than the bigger airlines and is more sensitive to costs. Alright, so now we're going to talk valuation. The real kicker, Delta stock trades at a P ratio of just 8.2, much cheaper than the airline industry average and a fraction of broader market multiples. Its price to sales ratio is 0.58, making it a true value play at this price, offering low risk but high upside potential if management delivers on the earnings. Analyst price targets from Morgan Stanley and JP Morgan have a range of about $70 to $75, implying a 20 to 30% move from current price, upside from the current price of $57. But still, you have to remember that this stock faces a lot of challenges. Delta shares are down 4% on the year, with the S&P up over 13% this year, despite the management's confidence in customer loyalty and cost control. The big question tomorrow, will holiday travel finally ignite this undervalued stock? Will management show confidence instead of caution? Alright, so here's my hot take on Delta. I personally will want to look at their earnings, see how spending is, how holiday travel is, people are booking their trips now. So it should reflect on this earnings, maybe quarter four earnings, but you do want to listen to the tone, see if they're confident or cautious on the economy, and yeah, I think that will dictate where the price goes for the stock. And the stock could definitely go up on lackluster results, it can go down on lackluster results. It's really the guidance and the confidence, but I definitely think if there's a beat, the stock will go up. If there's a beat, the stock could go down. You never know. Thanks for watching. Drop your comments below. Stock Brock, peace.